Jeremy,
Hello.
how's it going?
Yeah, I'm good. How are you?
Good. It's great to see you.
Yeah, yeah, and you too. Yes, awesome.
Great, great. So looking forward to this. So just real quick message for those of you on the live who may be joining for the first time. Feel free to drop any comments you have in the chat, or if you have any questions, you can use the question mark button on the bottom right. But we'll go ahead and get started. So welcome everyone to episode 66 of Live with the Maverick. My name is 𝗟𝗶𝘃𝗲 𝗪𝗶𝘰, founder of Maverick Actuary. We are a content community. Our mission is to maximize the impact and value of quant professionals on a global scale. The goal of this series is to educate our community on the most relevant themes in actuarial science, risk management, and analytics. The theme of today's discussion is actuarial pricing part 2, and we are very excited to have with us our guest, 𝗟𝗶𝘃𝗲. Jeremy is director at PriceWriter, a small consulting firm focused on general insurance pricing. Jeremy is also a writer for the Actuary magazine, a publication of the 𝗟𝗶𝘃𝗃𝗲. So welcome, Jeremy. The floor is yours. Love to give you an opportunity to introduce yourself.
Hello. Yes, so I'm 𝗟𝗶𝘃𝗃𝗲. So I am, as Dominic said, so I lead the PriceWriter. So PriceWriter is a GI pricing services company. So by GI, I mean kind of P&C for people in the US. So we solve the problems of leaders in general insurance pricing to make them as the most successful and highly valued leaders. And we do that using our 9-step method. So I'll talk all about that during the podcast.
Great, great. So any interesting hobbies, Jeremy? Actually, I have to ask you, like, I think we might have talked about this. Like, you're not like much of a football fan, are you? Or did I miss that?
No, not much of a football person. So I keep fit by running and walking. So I typically go out kind of an hour a day. So I do 9K sort of 3 times a week.
Nice.
And the other days I'll take a decent long walk to keep fit.
Do you have a team that you support? A football team?
No, I'm not really a football guy. Yeah, I think kind of, yeah, it's not really for me.
As long as it's not Manchester City. I'm just kidding. I'm a United fan, so yeah.
Well, my brother's a Liverpool man, so he's always supported Liverpool. Not for any reason that I know, because we didn't sort of grow up in Liverpool or anything like that. It's just always been his favourite team.
Okay, interesting. Yeah, so we'll talk. You know, so I want to talk a little bit more about PriceWriter, but the first thing I want to ask about is, I noticed on your website you mentioned that you actually started your career as a junior, I think it's a junior group life underwriter. So why did you decide to switch from underwriting to actuarial?
Yeah, that's it. So many years ago, so when I first started out, I worked in a group life department. So we were underwriting large policies for employers of life insurance. And I was sat there one day, I was filling in a proposal form. This is quite a long time ago. So we had computers, but it's fair to say things weren't really computerized. So we used to print our proposal forms off, and we'd literally write numbers and information on the forms and then put them in our cupboards and folders and stuff. And I was there one day, I was like calculating, I think it was the sum insured on a policy, and I was looking up on the actuarial tables what number I had to times this by, using a calculator to actually fill in this form. And it just occurred to me that I was like, this is not the future. The future is not going to be people like me doing work like that and filling in forms. The future would be about the strong data analysis and the actually getting and making these things and automating them, and that's kind of how I saw the future as being. So I wanted to change to actually be the person who made the numbers rather than the person that just wrote them on forms.
Interesting. So was there an actuarial opening that you had to apply for, or did you kind of create your own role? How did that transition work?
Well, it was a bit different really. So I had joined underwriting from, I'd ended up in sort of a path that led to it from school. But at the time I didn't actually have a degree. So I went back to study actuarial science at university. So I was a little bit older than everyone else. But I think that really helped in my career later.
Great, great, great. Yeah, well, I mean, it was just something that stood out to me because it's an interesting transition. I've certainly heard of some actuaries, I guess, kind of later on down the line going into more underwriting leadership roles, but definitely less common the other way around. So had to thought that would be good to ask you about. So kind of
Yeah,
back to
well,
the price.
I mean, even as a boy, I was always interested in the math side of things. Some of my favourite books are the Foundation series by Isaac Asimov, and that's about using mathematics to forecast the future. And I kind of draw a direct line between that and where I've ended up.
Interesting. So, you know, you did talk a little bit about price writer, but just want to dig a little bit deeper just to get a sense of kind of, in terms of your company, I did mention that you're focused on general insurance pricing. How would you describe like your client profile and kind of the value that you provide to the market?
Yeah, so what's important to me is to work with leaders in general insurance pricing to make them the most valued leaders among the most valued leaders in their organisation. So what we do is I felt that largely a lot of what other people do focused very narrowly on modelling. So people would focus in just on the sort of the GLM or the GBM or so on. And actually there's a lot more now that goes into running a pricing department. In the UK, they've grown. They're often over 100 people working in the department. Lots of other disciplines have come into the pricing area. And really what we do is look at that from start to end. We look at the whole picture rather than just focusing on one small area.
So in terms of, I mean, I guess one natural follow-up I have is like, how is what you do different from, like, say, a Big Four consulting firm? So when would someone come to a firm, smaller firm or shop like yours versus one of the more established firms?
Yeah, that's it. So like I say, we felt there was always a focus on modelling. So what we have that other people don't is that we solve more problems than that. So I mentioned a couple of times our 9-step method. So the steps in it are strategy, data, analysis, enrichment, deployment, modelling, governance, capability, and tools. So inside of that, we identified about 10 significant problems that most pricing leaders have. So 10 in each area, so about 90, kind of close to 100, but about sort of 90 to 100 problems that pricing leaders have that fit into those. And we find a solution that we can offer for solving each of those. So, for example, there's a lot of pricing IT systems available now. So it used to be there really wasn't very many. Now there's a proliferation. There's quite a lot of off-the-shelf options. There's also the options that are open source. So something we do is work with a pricing leader to gain the requirements from throughout their pricing team and the other parts of the organisation, and then help them to select the right software for them. And that's something I feel that we can do a lot better than other people can, because we've really used these systems and we've been there dealing with the problems that other people have.
Interesting. So I'm very excited to explore the 9-step framework a little bit further on, but let's first take a step back. When we talk about pricing, what are the most pressing challenges that you're seeing today for clients who are doing pricing work?
Yeah, so I mentioned one of them, which is actually choosing the right software for your team, but also there's the whole architecture of your system. So we do an awful lot of complicated data and data analysis now. Pricing tables can be very large. There's actually deciding on what the right architecture is for the team. There's also what skills do we need now. So I mentioned that pricing teams have grown. They've grown much bigger than just data and analysts. It's not unusual to to find them staffed by data engineers, data scientists, coders, programmers, IT staff, testers. So there's a lot of abilities, a lot of different skills that fit into that. So actually deciding on how to build and structure a team effectively for lots of people working together is another problem that that comes up. We're living in a more uncertain world, so inflation has been a hot topic for a while. It has dropped off in a lot of countries, but we're still waiting to see how it's going to happen in future. MI and data is another side. So I mentioned we have big systems, but how do we actually format our MI? What you don't want is your team constantly going and having to rebuild data and MI every time they need to find something out. So actually how to efficiently build that so people can get the information that they need. Similarly with MI, so we're working with one client at the moment to design a profitability MI tracking for them. So actually deciding what information they need to be receiving, who needs to be receiving it, how regularly, and how they'll actually take actions based on that. Enrichment's another area. We've seen an absolute explosion in the availability of external data, and it looks like there's no end in sight. So you can literally find out about any property in the UK and lots of other countries. It's flood risk, it's storm risk, wildfires, hurricanes, just all of this information, as well as the attributes about the property, like how many people live there, the number of bedrooms, the size, and so on. Similarly for cars, we've got all this data. So actually selecting the right data, getting the right price for it, choosing the right providers, these are all areas. So there's a whole wealth of things that people need to be doing now.
Interesting. So coming back to the 9-step method, so you developed this, you developed this framework called the 9-step method for successful general insurance pricing. I know you made a list of the 10 items earlier on, but how would you describe the framework and its underlying components? However you'd like to articulate. I know this is it sounds like a very dense topic, but I just, whatever you're open to sharing, I'd love to learn more about it.
Yeah, so the point of the 9-step method is really to break up the pricing process into manageable chunks and problems. And really it's about solving the problems that a leader in GI pricing has. And we want to make our clients the most successful in the organisation. We want them to be as highly valued as possible. If we take an area like strategy, for instance, it's my view that often, to be honest, pricing strategies are not very well defined. I think to be a good strategy, you should be able to communicate it in one word, one sentence, a paragraph, a page, and a document, and it should be consistent in all of those areas, and the different detail you go to depends on the particular audience. But I feel if somebody can't tell you what their pricing strategy is in one sentence, they probably don't have one. And there's an awful lot of confusion about what strategy is. Often people confuse it with the tactics of what they're doing, or they possibly confuse the objective that they're trying to achieve for the strategy. So that's an area that's really very important, and it's a high level area. Once you actually understand your strategy in your organisation, in your pricing team, and in the organisation, you can work better with other areas and get the most from your team.
Yeah, so strategy, any other area, and we're going to actually revisit strategy later. I have some more pointed questions on that. But as you kind of look through the 9-step framework, any of the other areas, I know there are several other areas that you'd like to talk about and expand on.
Yeah, so I mean, if we talk about capability, so I tend to find that it's quite difficult in general insurance to train people in certain areas. So I mentioned that we've got people coming in from lots of different disciplines. For example, a data engineer coming into the team. And actually there's questions about how you train them then to be most effective in a P&C pricing area when they've probably got experience or may not have any experience. but we tend to have different needs to other areas. We're often working with very, very large granular data, and a lot of other areas can work at more of a high level, but we really have to understand the customer in a very detailed way. And actually it's difficult because you can't really send people on training courses for that. So we offer solutions there, such as helping and training people. I've used the example of data engineers, but there's other roles inside a pricing team that people need help with developing as well. And it's difficult because, for instance, here in the UK, you can't send someone on a course that is, say, compliance in GI pricing. But actually, that would be a useful thing to be able to do, especially at the moment, our regulator is being more interventionist in how things are done. So there's more rules in the GI pricing area than there ever were before, and there's more coming. So actually being able to help people with navigating that and getting their team to the right skill and ability levels is, again, something we provide solutions to our customers on.
Great. So we talked about strategies and capabilities. Of course, data is a part of that, as for actuaries and especially those doing pricing, both internal and external data, I think you mentioned. So regarding those two, anything in particular? I know in our pre-meet, we talked about a few interesting like parallel data sets. Like, so from an internal and external data perspective, anything you'd like to share there?
Yes. So external data, so we usually call that enrichment, and there's a lot of data that's available now. The UK's been sort of ahead in this in some ways. Other countries in Europe are catching up. I know the US, you can get lots of good peril data. We're quite lucky in the UK. A zip code here covers only about 10 houses. So we've always had quite granular data in that way. But actually lots of other countries are catching up. So there's a huge amount of data that's available about the person, about the things we're insuring, about the customer. Everything we can often get externally now, and it feels like a long road that we never come to the end of. There's new data coming in. We've data sets now that are designed so that we don't even have to ask the customer any questions, which I think would be great, because I feel like I spent kind of the first half of my career asking people to ask more questions of the customer, so making proposal forms longer, and I think I've spent the second half of it trying to find ways to cut that question set down, because it is a poor customer experience when they're faced with answering kind of 100 questions just to get the price. It's not a brilliant customer experience. But there are external data sets that will fill those in, and actually sometimes we can get even cleverer, where we might well be needing to confirm with the customer where we believe the details are different to those that they've perhaps entered on the proposal form for whatever reason.
So would you say, from a well, we're talking primarily about external data here, would you say that there are particular lines of business where it's easier to get external data versus others, or would you say it's kind of very comparable across the board? So like if you look at, for instance, personal lines versus commercial, you know, in commercial, small commercial versus mid-size versus large, do you see a huge disparity in the availability of external data?
There's different data in different areas. It's pretty interesting area, actually. So if we think about the connected areas, so sensors, that's interesting enough. A lot of workplaces and commercial properties, they actually already have a lot of stuff that's monitored. So as an example, leak detectors or power usage, those are already quite strictly monitored inside commercial property. Or if we take fleets of vehicles, telematics and Internet of Things has caught on very quickly in that area, often because employers might well already be monitoring those vehicles or have other uses for the data in monitoring their vehicles, keeping their employees safe and knowing at any time. So in that way, there's different data in different areas. So in the personal line space, people aren't always so keen on the deep level monitoring, although even then, a lot of the telematics and the pay-as-you-go products have caught on there. So does that make sense? So there's a lot of sort of, there's different areas. Of course, there are some areas that remain not very well punctuated with external data, but even there, we're definitely seeing a movement towards things becoming available.
One area I actually I definitely want to ask about is, because I know there's a lot of variability on this side, is when you think of like catastrophe modeling, are we seeing, like, when you think of, you know, things like, I mean, I feel like I'm nervous to kind of mention the same perils because I don't know how they translate to the UK, but for instance, in the US, we have tornado, hail, or severe convective storm, we have wildfires, and I imagine you have, whether you have some of that or you have some of your versions, other perils that are more specific to your geography. Are we seeing, you know, an improved ability to kind of leverage that data to refine pricing for, you know, some of those catastrophe models, those high variability models, would you say, from your perspective?
Yeah, so I've worked in a few countries. So we have in the UK we don't have tornado, but we do have hurricanes, we do have flooding, hail, and so on. I've priced household in a few other countries, mostly in Europe, but different countries do have different perils. There is more data coming in. There is better modelling tools becoming available for catastrophe areas as well. It feels a bit to me similar to weather prediction. So weather prediction has improved, though many of us don't always feel like it has, but it has improved over our lifetimes. But because these are problems that involve modelling often in 3D spaces, it's actually not as advanced as quickly as some of the modelling that happens in 2D spaces. I don't want to get sort of nerdy about why that is with kind of computers and so on, but it's just a slower development pace to actually improve forecasting when you come into the 3 dimensions. You've also got things like chaos theory, and a very high level of uncertainty comes in, and we've got limited past data ultimately, and also very arguably the world is constantly changing.
Interesting. The last thing I wanted to ask on the kind of the 9-step methodology is that we talked about a few things, you know, strategy, capabilities, data, but when it comes to data too, you know, I think one of them is deployment. So it's not just having access to the data, but to be able to make it usable for analysis. Kind of any thoughts on that, and like kind of is that I'm guessing that that's one of the specific challenges that you're addressing as well.
Yeah, so deployment is at the heart of the 9-step method, because it's everything involved in getting the work we do out into the real world. So making sure that the work we do actually affects how we set the end customer price, the price that customers actually experience, and the information that they receive on things like their renewal documents and their proposals and so on. But it's really how we get all the great work that we're doing into the world. And it's another area I felt that perhaps we haven't been as good at in the past as we really should have been. So sometimes I feel like there's a really big focus on modelling, but things can sometimes go wrong or not go at that well when it comes to actually getting those complicated models into really calculating the end customer prices. Or there's a lot of analysis that goes on in the back end, like with catastrophes, or maybe with large claims as well, or generally with peril modelling, or even understanding the expense of the business that gets done, but doesn't necessarily make it intact through that gateway into the deployment world. And it's why we're finding teams get larger, because deployment is hard. It's difficult to get stuff out there. It involves working with IT teams. Often things can go wrong if this isn't done well. You've got to map a lot of data and variables. For example, we talked about the external data. If you want to look that up live during a rating process, if somebody's quoting online, you need to return that information very quickly into the rating engine, which needs to calculate something and return it. So it's all those steps involved in that end part that really makes all of the other stuff that we do matter.
Yeah. So I lied. There's something else I wanted. You just kind of mentioned modeling. I'm just curious because in the U.S., so this is more of a U.S. and versus UK question. So in the U.S., traditionally GLMs have been more common just for regulatory reasons. They're multiplicative, easier to, and explainability reasons. But of course, there are more advanced models now that are starting to be used more common in the pricing space. So in the UK, would you say, like, how is that trend between using GLM and then using more advanced models? Are you seeing a shift from one to the other? Like, how do you describe that?
Yeah, so I think firstly it's really interesting that nowadays when we say traditional techniques, we mean GLM. Because when I started my career, if somebody said traditional techniques, they generally meant an underwriter just writing some prices. So it's interesting how the world has changed in that way, fairly rapidly as well, kind of 15, 20 years. So I think it's about using the right tool for the job when it comes down to this. So I think if you are if you need, so we need to be able to explain our prices, and that's explainability is a very multifaceted thing. So sometimes it's explainable by a narrative because we understand how something that the customer does, or some way in which they behave, or the way their characteristics or whatever it is we're insuring affects the risk, and we can draw a direct line between that. Sometimes explainability is about looking at the statistics. So we might not have a narrative explanation, but we have very strong evidence that there's a statistical link between something we experience and something, the way that we want to set our prices. So when it comes to modelling, people do very commonly still use GLM in the UK. Some other styles of modelling are used, so some people do use GBMs and others. But what I think is just really fundamentally important is actually that we understand our prices. And what I mean by that is if a customer queries or complains about their price, we can give a decent explanation of it. What I really dislike hearing is things along the lines of, well, we use very complicated models to arrive at a final customer price, because that's just a poor answer. I think one of the things I've seen be very effective in this way is actually getting the pricing team involved in dealing with customer queries and complaints related to the price. So I don't necessarily mean talking directly to customers, but talking directly with the customer service agents who are going to speak to the customer and hearing from them about the customer queries and complaints, and then the pricing team actually doing something about that. So there's an anecdote that comes from Silicon Valley about, in startups, actually getting the coders and programmers to deal with customer bugs and queries directly. Yeah. And what you find is that the customer bugs and queries disappear. And I tend to find if you actually get people involved in having to explain the prices to customers and regulators as well, you tend to find that these issues with a lack of explainability disappear. And I know in the US you have to file your rates and so on. I think that is actually, although I don't necessarily think that's the best way to go about it, I do think that level of governance that people have and the knowledge they have to have over the prices they set is a good thing.
Okay, interesting. So one of the things you mentioned, of course, throughout the conversation, you're working with organizations who are dealing with general insurance pricing. So that could be whether it's startups or some of the larger insurers as well. So you work with heads of pricing. Within the scope of your work, you're working with heads of pricing on a variety of issues. So how do you think of, like, what does a modern pricing organization look like in terms of its structure and foundations from your perspective?
Yeah, so I think it's quite interesting. We've gone through a big transformation here. So when I started my career, it was not unusual to have 2, maybe 3 people in pricing. They were generally actuaries, and that would be the whole of the pricing team. And they might well look after several products. Now we've reached a point where it's not unusual to find over 100 people in an insurer's pricing team, and those are ever growing. And it's a range of different people and skill sets that you find in that pricing team. So if you imagine there's a chain that leads to you deploying your prices, so it starts with your data, you do your risk modelling, you pass it on to a street pricing team, it might then go through to a deployment team. So you have a long chain of people that are involved in actually deploying your prices, and they have multiple different skill sets. So you'll find that that's what you need now. And you also need people that are responsible for actually managing those processes. So it could be people that lead on a particular product. So they work to actually get the prices for a particular product working as best they can and deployed through that. Or indeed, we might have project managers who actually deal with getting the prices through and deployed for a particular project that people are working on. And it's interesting how, being that we've moved from a world of quite small teams to quite fairly large teams, management and leadership has become a very key need as well in the organisation. And that's really one of the things we work with to help pricing leaders to actually fulfil those roles. And I see that's just going to grow. I think certainly in the UK we're going to see pricing teams that are over 300 people before the end of the decade. And I think we'll see other countries similarly moving on this path towards larger and larger teams, certainly rivaling the size of underwriting, sales, perhaps even claims in some insurers.
That's interesting. No, I did say I was going to circle back on strategy, and I'm actually looking forward to asking this question, because at the beginning of the conversation, I'm fully on the same page with you there, where you said if you can't explain your pricing strategy within a sentence or two, or very succinctly, you don't understand what it is. So when you think of pricing strategy, I mean, I know every client, of course, is different, but are you seeing just like if you were to give us an example, are there very specific areas? So of course, I'll give just from my background, of course, profitability is always going to be important. So would you say that when you're kind of working on strategy, you're seeing some very common themes, like some strategies are, focused on profitability, some on retention, are there any, like, what are the most common themes you're seeing regarding strategy?
So I think the most common thing I ever see regarding strategy is probably not having a good one, or not necessarily understanding what strategy actually is. So different organizations have different objectives. So you might well have an organization where their objective is to grow. Typically people say things like profitable growth, but profitable growth is not really a strategy. So the strategy needs to be something that people can understand and work towards. So examples of a good pricing strategy, you could have fairness at the centre, and that's important for a lot of mutual organisations. You might put at the centre the flexibility of your rates. So you might decide it's important that you're able to actually change and move your prices very quickly. You could put at the centre of your strategy the accuracy or precision of your prices, so it becomes all about the individual customer getting a very, very accurate price for them. You might put at the center of it mutualization, so your strategy might be about actually spreading the cost across a lot of different customers. And it really depends on the type of organization that you are, what that price strategy is. So I always find it's important to be able to map what the organization says is its strategy into a price strategy. So too often what I see is that the organization says something like, we want to be the #1 choice for our customers, but that doesn't translate very well into how we set prices. So it's a very qualitative statement, and we tend to deal with quantitative prices, and then lots of people in the pricing team have different views on what that statement then means where the price strategy is concerned. So some people will see it as being it's about accuracy, because you're bound to be top choice if you got an accurate price. Some people might see it as being cheapest, and what I see is the key blocker to getting the best out of a team in a pricing department and getting them all moving in the same direction is actually having a clear strategy that everyone understands. Because if you decide, I think for a lot of people, they might feel that precision is the strategy of their pricing team, but that might not be what the strategy of the organization or the rest of the pricing team actually is. So in their view, in the way that too many cooks spoil the broth, you might well have somebody who's really focused on everything being about accuracy, someone else who's really focused on everything being about the flexibility of the prices, someone else who thinks that they should be mutualized, and someone else who thinks that fairness is at the center of it. So they don't work well together. But the thing that's important is that the strategy doesn't mean that you can't do the other things. If your strategy is accuracy, it doesn't mean you can't be fair. It's just that fairness is an objective. The strategy is how you deliver that fairness. So you might then, if your strategy, you decide that the flexibility of your prices is most important, then every way in which you deliver the objective, which is profitability, fairness, growth, etc., you need to do in alignment with that strategy, so it'll be in a flexible way. And once the whole team understands that, you can pull in the same direction just so much more easily.
That's very helpful when we talk about the strategy and kind of how you think that through. I want to just drill one step deeper. Well, so when we think of strategy, what are some of the key strategic considerations? Like when we establish broadly speaking what those are. So some of the things that, I know that we've spoken about before, software, skills mix, cloud modernization, and whether you push data to the cloud, or what are some of those key strategic considerations? Like as you are kind of working with clients on strategy, what are some of the most common ones that you're thinking through?
Yeah, I think it's why we've got kind of the 9 steps, because that's really a framework that fits around all the things that are important to running a modern pricing team. So for instance, modeling is in there, but it's not it's just a part of what we do. And it's an important consideration, but as is the enrichment, because that's an area that people, the world is ever changing. You can really get a benefit and advancement and an edge over your competition by using enrichment and more outside data. I mean, we talked a lot about direct enrichment, but actually there's a lot of indirect enrichment. And I think on this side, having people who are very good, knowledgeable about the things we're pricing, about the actual thing we're insuring, can make a big difference here. And I think that can be quite a strategic bonus for an organization, and that might be that they build their strategy around that. So what I mean here is to give an example. When I first started out a long time ago, I remember asking my boss at the time if they would let me learn more about the particular product we were insuring, to actually learn about the item. And the view back to me was that the maths we use would work whether we were insuring elastic bands against snapping. So there's really no reason why you should want to learn more about it. And it just always felt really wrong as a way to go about things to me. And I think that's really changed. So instead of it being a matter of people feeling that the knowledge should be in underwriting or claims, we see now actually experts in what we're insuring, in pricing, and we want to train people more in the pricing area about the things we're actually insuring, because it just makes sense to me. If you are insuring a car or a property or a business, liability and so on, the more you know about that, the better you are at insuring it, especially when it comes to areas like legal, where maybe our knowledge often needs more development. So these are the strategic things I'm thinking which really fit around those 9 steps, because that covers the areas where people really have problems that PriceWriter can help them solve.
I have a quick follow-up on that, specifically when it comes to the cloud. You mentioned that one of the common things that clients want to know is whether to push data to the cloud. So what are the primary drivers of deciding when it makes sense to actually go from on-prem to cloud?
Yeah, this is an interesting one, because it's a bit of a tapestry really about how you do this, because there's some areas that fit well with being in the cloud. So for example, rating engines, having them in the cloud can make sense for a lot of providers because they already, the quote process is probably online anyway, or they've got a system that they use in the call center or for their agents in the field. So it makes sense really for those areas to be in the cloud. Now, not for everyone. This is something we can help people with to actually work out what's best for them. But quite often that can be in the cloud. An area that's possibly not so often is the pricing data. Now, the reason for that is that pricing data is often absolutely massive. We use a lot of rating factors in the UK. Other countries are often following us. There's telematics as well. So we're talking about huge data sets. And then you're talking about processing them, and often you pay by how much you process, how much you move around the data, and so on. So in that circumstances, cloud might not be the best solution. So I'm not saying it never is, but I'm saying that people have different needs and different levels, and you need to consider all of these things in the round and not just sort of be forced into kind of an insurer one day is pushing everything to cloud, or an insurer wants to bring everything back to on-prem, but actually finding the right solution for the different parts.
Yeah. That's interesting, because I've always thought of cloud as being a benefit for scaling. So would you not, because a while ago I think the example you mentioned is when you have these large data sets, cloud would not be beneficial. So can you articulate on that? Why it wouldn't be in this case?
Yeah, I mean, it depends on the situation. It can be beneficial for some people because in the cloud you might well then connect it straight up to what you're modeling, so you don't have to move around large data sets. So in that way it could be a benefit having it in the cloud. And yes, it is more easily scalable. You don't have the situation where you run out your network's hard disk space trying to do a pricing exercise on a GLM. So in that way it can be the right decision for people, and it can make sense. It's just there's a flip side sometimes, which is for some people it might not be the best choice.
Okay, interesting. So last thing I wanted to ask about is, we talked about the qualitative and quantitative sides, or objective sides. So how do you describe the difference between quantitative and qualitative objectives, and how that gap can be bridged?
Yes, it's an interesting one. So often organizations, they have quite concrete financial objectives, but often the strategy and so on is quite qualitative. I mentioned earlier an insurer who literally says we want to be the first choice for our customers, but you have other kind of qualitative objectives that an insurer might have. So being ahead of the competition, leading the field, number one choice, and so on. So something that PriceWriter does is actually work with an organization to design the price strategy around what the company's objectives and their own corporate or indeed the strategy of the business. So we work with the pricing team to work out their needs, and then we talk to other areas, other stakeholders in the business to understand what the strategy and objectives actually mean to them and as a business. And sometimes we uncover that it means different things to different parts of the business, which is quite interesting as well. Sometimes we discover that an insurer genuinely lives and breathes its values and strategy. Absolutely. I do know one where I really feel that is absolutely the case. I know someone else who has like seven things, 7 key principles, and I mean one of them is actually then a list of 5 values, and I don't think it's really embedded in that organization at all. But we work with organizations to turn that into something that the price team can actually understand and agree with. So having worked with the stakeholders to understand their needs, we then work in pricing to actually map those into a price strategy, and we work very hard, like I said, on making it a word, a sentence, a paragraph, a page and document, something that people can really understand. A good price strategy should work for a graduate who's just joined the organisation. They should be able to see it and be like, oh yes, I understand how I am to do my job. And it should work all the way up to a board member to say, okay, I get how pricing should operate from this document.
Great. Well, this has been very insightful for me, and really appreciate you taking the time, Jeremy, and I think you're doing very meaningful work, and I'm looking forward to continuing to following your journey and reading some of your articles that you publish through Actuary Magazine and LinkedIn. So thank you very much, and looking forward to sharing with this, and hope you enjoy the rest of your week.
Brilliant. Thanks a lot, Dom. I'm always on LinkedIn, so I've got lots of articles on there. People can read about the 9-step method and all the good work that we're doing.
Excellent. Have a good one. Take care.
Brilliant. Thanks very much, Dom. Have a good day.
You too.
Thanks. Bye bye.